Joining me now with his take on what's moving gold is Larry Shover. He is Chief Investment Officer at SFG Alternatives, and he's at the CME this morning. Larry, it's not just about the stronger dollar anymore. This Fed tapering is starting to be priced in more aggressively.
I think you're right. I mean, we simply cannot deny that the normalization or the perception of the normalization of U.S. monetary policy continues or remains a sword over gold's head. But to your point, I think there's more to the story. I mean, lately, the market's been in a risk-off vibe. It's had a risk-off vibe to it. Lower energy prices, higher equity prices have soothed the gold market and have put the bears in control. We've had higher treasury yields in general. That, by extension, means that we think our economic numbers are going to be good, or at least good enough for the dollar to dominate the gold price. And lastly, this is an old story, but there's a lack of buying interest from central banks, retail buying, and also Indian government policy making it much harder for Indians to buy gold. So that's weighing on the gold price right now.
Still, Larry, you have this macro environment in which there's still a lot of uncertainty. The Federal Reserve's next move may be to taper, but we still don't know when. Why isn't that uncertainty benefiting gold more?
Yeah, you'd think it would, and I think so many people just believe that, Europe's not going to have any speed bumps. The fact that the Fed's going to be able to exit this whole tapering process without any kind of difficulties whatsoever. But I think overwhelmingly the market's just not pricing in any inflation whatsoever. That's keeping a lid on the gold price, at least long term.
There's also a rebalancing that you're seeing in gold. Tell us more about that.
Well, we're seeing rebalancing, but it's really murky to look at. I mean, on one hand, we're seeing a lot of buying interest out of China, but again, those numbers are a little bit murky due to what we call round tripping. There's an arbitrage process for interest rate in foreign currencies. People use gold in the process. China does not count or measure gold going back into Hong Kong, so the numbers in the rebalancing are really evasive at best. So a lot of uncertainty on how much is being bought right now and how much is being rebalanced.
Right, those numbers don't tell the full story. Larry, what is needed for gold to make a sustained move higher?
Well, one thing, we need to have inflation, any type of inflation. We also would need to have a major speed bump in the Eurozone, something that we're not seeing right now, or any kind of difficulty in the U.S. with Fed tapering. And again, it doesn't seem like we're pricing that in correctly enough. So those three things will probably need to happen, one of the three, for gold to bounce.
All right. In the meantime, institutional investment remains on the sidelines for gold. Gold holding near a 4-month low. Larry Shover at SFG Alternatives. Thank you for today's Futures in Focus. We're on